Hey, this is Conrad Layn here, here at Long Beach Airport drop-off. Just want to get right into G.A.P Insurance, teach you guys a Lane quick tip. I personally believe that if someone gets finances a vehicle or gets a car loan, they should get G.A.P Insurance because it's usually fairly inexpensive, very cheap. It's one of the few things that I do feel you should actually purchase if you choose to finance or get a car loan to acquire a vehicle and put on Turo. Also, the beauty of it is G.A.P Insurance helps you pay off negative equity. What negative equity is, it just means essentially that the vehicle market value, whatever it's worth, say per KBB, Kelly Blue Book value, or based off of whatever the value you're trying to sell it for, if something happens where the car's total loss, damage, stolen, etc., the G.A.P Insurance will pay off the remaining amount of whatever the negative equity is. So for example, if your vehicle is worth only $15,000 and your car loans worth $20,000, that means it has a negative equity value of $5,000 that you must pay. That sucks because that means the loan amount is worth more than the car itself. That's called being underwater or upside down loan. The same thing happens in real estate. If a real estate loan's worth more than the actual property at hand, the property is deemed underwater. The way to get out of this, essentially, if you're in a situation where your car's total loss, damage, stolen, so you're not left having to pay negative equity, get G.A.P Insurance. I'm not telling you to get it. Do your own due diligence. Just giving my perspective and over 8 years of insurance expertise and experience from being licensed. I'm not telling you what to do. Just give me a perspective and different way of thinking. Do your own due diligence. Look at the final terms and conditions of the G.A.P Insurance. But I highly recommend, in my benefit, after you read it, you'll probably agree as well. But do your own due diligence. G.A.P Insurance will help you get out of a situation if your car is stolen, damaged, and you have to pay the negative equity. Again, G.A.P Insurance pays off negative equity. If your vehicle's worth $15,000, for example, but your loan's worth $20,000, you have to pay $5,000 after your vehicle's already been destroyed. Really bad business expenditure, but way to get out of it, G.A.P Insurance, G.A.P Insurance. I'm gonna leave links below. Have Conrad Layn out.